Based on the historical data and forecast, Bitcoin shows a downtrend. The RSI consistently stays below 50, indicating a bearish sentiment, and recently dipped below 30, signaling a potential oversold condition. The forecast for the next week predicts further decline, with prices dropping from $104,000 to $94,800. The support price remains steady at $85,100, acting as a potential floor. Considering these factors, I recommend a short selling strategy. Entry price should be $104,000, with a stop loss placed at $107,100 to protect against a potential reversal. The target price for this short position is $94,800, aligning with the forecast low. To refine this strategy, we'll incorporate Bollinger Bands. The price is currently trading below the lower band, reinforcing the downtrend. A short position entry at $104,000 with a stop loss at $107,100 and a target price of $94,800 provides a favorable risk-reward ratio. This strategy leverages the bearish momentum and utilizes technical indicators to manage risk effectively. The support price of $85,100 can be considered as a secondary target if the initial target is reached early. This combined approach offers a high probability, high return investment opportunity in the current market conditions. Based on the historical data and forecast, Ethereum exhibits a declining trend, particularly evident in the recent forecast prices hovering around $3,060. The RSI consistently dipped below 50, reaching a low of 29.3, indicating a strong oversold condition. Considering the support price of $3,010 and the forecast suggesting further decline, I propose a contrarian strategy aiming to capitalize on a potential rebound. We will initiate a long position at $3,220, placing a stop-loss order at $3,010 to mitigate potential losses if the downtrend persists. The initial target price will be $3,510, aligning with the forecast price on November 5, 2025. To refine this strategy, we'll incorporate Bollinger Bands. The current price is near the bottom band, suggesting a possible bounce. If the price breaks below $3,060, we will immediately exit the position. Conversely, if the price reaches $3,510, we will consider a partial profit taking and adjust the stop loss to the entry price, securing gains while allowing for further upside potential. This blended approach, combining RSI signals, support and resistance levels, and Bollinger Bands, aims to maximize returns while managing risk in this volatile market. Based on the historical data and forecast, XRP shows a declining trend. The RSI consistently falls below 50, indicating a weakening momentum. The forecast for the next week predicts further price decreases, ranging from 2.29 to 2.04. Considering the support price of 2.14, we will implement a short selling strategy. Entry price will be $2.29, with a stop loss set at $2.31 to protect against a potential rebound. The initial target price is $2.18, aiming to capitalize on the anticipated downward trend. To enhance the strategy, we will incorporate the Bollinger Bands. If the price touches the lower band, it signals a potential oversold condition, prompting a reassessment. If the price breaks below the lower band of $2.04, we will adjust the target price to $2. This combined RSI and Bollinger Bands approach allows for dynamic adjustments based on real-time market conditions, maximizing potential returns while mitigating risk. Based on the historical data and forecast, BNB shows a downtrend. The price has been consistently falling from November 5, 2025, with a forecast reaching $886. The RSI indicates oversold conditions, particularly on November 4, 2025, at 32.6, suggesting a potential bounce. However, the Bollinger Bands indicate that the price is nearing the lower band, reinforcing the bearish sentiment. Therefore, I recommend a short position strategy. Enter a short position at $1,010, placing a stop-loss order at $1,100 to protect against a potential reversal. The initial target price is $956, aligning with the forecast for November 5, 2025. To maximize potential gains, I propose a dynamic adjustment to the target price. If the price reaches $956, we will move the stop loss to break even at $1,010. If the price continues to fall, the next target price is $925, and subsequently $886, following the forecast. This tiered approach allows us to capitalize on further downward momentum while mitigating risk. The overall strategy combines RSI oversold signals with the bearish trend indicated by the Bollinger Bands and forecast data, creating a high-probability short trade. Based on the historical data and forecast, Solana demonstrates a clear downtrend, particularly evident in the recent forecast period. The price is approaching the support level of $152, and the RSI consistently remains below 50, indicating a bearish momentum. The Bollinger Bands also suggest a contraction, which often precedes a significant price movement. Given this analysis, I recommend a short selling strategy. Entry price will be set at $165, with a stop loss placed at $173 to limit potential losses if the price rebounds. The initial target price is $152, aligning with the established support level. To enhance the strategy, I suggest incorporating RSI signals. If the RSI drops below 20, indicating an oversold condition, we can consider covering the short position at $152. Conversely, if the RSI reaches 80, signaling an overbought condition, we can close the short position at $152. This approach combines the trend-following strategy with momentum indicators to refine entry and exit points. The portfolio will be 70% short selling and 30% RSI signals. The potential return is high, but risk management is crucial, and the stop-loss order is essential. Based on the historical data and forecast, TRON exhibits a downtrend. The price has been consistently approaching the support level of $0.281. The RSI values have mostly remained below 50, indicating a bearish momentum. The forecast for the next week predicts a further decline, with prices ranging from $0.287 to $0.27. Considering these factors, I recommend a short position. Entry price should be $0.287. A stop loss should be placed slightly above the recent high of $0.298, at $0.3 to limit potential losses if the price unexpectedly reverses. The target price should be set at $0.27, aligning with the forecast and providing a reasonable profit margin. To refine the strategy, we'll incorporate the Bollinger Bands. The price consistently trades near the lower band, reinforcing the downtrend. Therefore, a combined strategy will be implemented. If the price touches the lower Bollinger Band, it signals a potential entry point. If the price is at $0.272, enter a short position with a stop loss at $0.28 and a target price of $0.26. This strategy leverages both the RSI and Bollinger Bands to maximize profit potential while minimizing risk. The overall portfolio will prioritize the short position based on the combined indicators, aiming for high returns in a declining market. Based on the historical data and forecast, Dogecoin shows a clear downtrend. The price has been consistently falling, and the forecast for the next week projects further declines. The RSI consistently stays below 50, indicating a prevailing bearish momentum. The Bollinger Bands are also contracting, suggesting decreasing volatility and a potential continuation of the downward trend. The support price of $0.158 has been tested multiple times, reinforcing its significance. Therefore, a short selling strategy is recommended. We will implement a tiered short selling strategy. The initial entry price will be $0.162. Given the strong downtrend, a stop loss will be set at $0.167 to protect against unexpected reversals. The first target price will be $0.157, aligning with the forecast and the lower Bollinger Band. If the price reaches $0.157, we will move the stop loss to $0.154 and set a second target price at $0.149. This approach allows us to capitalize on the expected decline while mitigating risk and securing profits incrementally. Based on the historical data and forecast, Cardano exhibits a clear downtrend. The recent close prices have been consistently declining, and the forecast for the next week projects further downward movement. The RSI consistently dips below 30, indicating an oversold condition, but the downtrend persists. The Bollinger Bands show that the price is approaching the lower band, reinforcing the bearish outlook. Considering these factors, I recommend a short position strategy. The entry price should be set at $0.481, coinciding with the forecast price on November 7, 2025. A stop loss should be placed at $0.552, slightly above the recent support level and the lower Bollinger Band to protect against a potential reversal. The target price is $0.454, aligning with the forecast price on November 8, 2025. To refine the strategy, we can incorporate the RSI and Bollinger Band signals. When the RSI is below 20, it suggests a potential bounce, but given the overall downtrend, a short position remains favorable. The price touching the lower Bollinger Band indicates a potential for further decline. Therefore, the strategy is a short position with an entry price of $0.481, a stop loss at $0.552, and a target price of $0.454. This strategy aims to capitalize on the anticipated downward trend while incorporating risk management measures to protect against unexpected price fluctuations. This approach balances the potential for high returns with a controlled level of risk. Based on the historical data and forecast, Wrapped Beacon ETH has shown significant volatility with a recent downtrend. The RSI consistently dipped below 40, indicating oversold conditions, while the Bollinger Bands have been widening, suggesting increased market uncertainty. The forecast for the next week predicts a continued downward trajectory, with prices potentially reaching $3,190. Therefore, I recommend a short selling strategy. The entry price will be $3,760, with a stop loss placed above the upper Bollinger Band at $4,560 to protect against unexpected upward spikes. The initial target price will be $3,550, aligning with the forecast. To maximize returns, I propose a tiered target approach. After reaching $3,550, we will move the stop loss closer to the entry price to lock in profits and reduce risk. The next target price will be $3,490. If that level is achieved, we will adjust the stop loss again, aiming for $3,380. Finally, if the price continues to decline, the ultimate target will be $3,190, coinciding with the forecast low. This strategy combines RSI oversold signals, Bollinger Band volatility, and forecast data to manage risk and capitalize on the anticipated downward trend. Based on the historical data and forecast, Chainlink exhibits a declining trend. The price has been consistently decreasing from October 22, 2025, and the forecast for the next week projects a continued downward trajectory, potentially reaching $13.2. Considering the RSI values, which have been fluctuating between 32.7 and 46.8, indicating periods of both oversold and overbought conditions, we will implement a combined strategy leveraging RSI, Bollinger Bands, and support/resistance levels. Our primary strategy will be a short selling approach. We will enter a short position at $15.6, placing a stop loss order at $16.3 to protect against unexpected upward movements. The initial target price will be $14.2, aiming to capitalize on the anticipated downward trend. To refine the strategy, we will incorporate the Bollinger Bands and RSI signals. If the price touches the bottom of the Bollinger Band and the RSI falls below 20, we will consider covering the short position, or adjusting the stop loss to $15.3. If the price approaches the support level of $14, we will evaluate the RSI. If the RSI is below 30, we will tighten the stop loss to $14.7 and set a target price of $13.2. This layered approach allows us to adapt to changing market conditions and maximize potential returns while minimizing risk. Based on the historical data and forecast, Cosmos Hub exhibits a downtrend. The price has been consistently declining over the past 2 weeks, with a forecast indicating further downward movement. The support price remains steady at $2.51, while the resistance fluctuates around $3.1. The RSI consistently remains below 50, indicating a bearish momentum, with readings dipping as low as 26.0, signaling an oversold condition. The Bollinger Bands show that the price is approaching the lower band, further confirming the downtrend. Considering these factors, I recommend a short selling strategy. The entry price should be $2.61, coinciding with the initial forecast price and the lower Bollinger Band. A stop loss should be placed at $2.91, just above the recent bottom of the Bollinger Band, to limit potential losses if the price unexpectedly reverses. The target price is set at $2.11, aligning with the forecast price for the end of the week. This strategy aims to capitalize on the anticipated downward trend while mitigating risk with a carefully positioned stop loss. A conservative approach is warranted given the volatility observed in recent trading days. Based on the historical data and forecast, Artificial Superintelligence Alliance is exhibiting a strong downtrend. The recent close prices have been consistently declining, and the forecast for the next week projects further decreases, reaching as low as $0.143. The support price is consistently at $0.209, while the resistance is at $0.236, indicating limited upward movement. Considering the RSI values, which have remained below 35.1, consistently in the oversold territory, we can implement a contrarian strategy. We will initiate a short position when the price approaches the $0.236 resistance level, setting a stop loss at $0.257 to protect against a potential upward bounce. Our target price will be $0.143, aligning with the forecasted low for the week. To further refine this strategy, we'll incorporate the Bollinger Bands. The price has been consistently trading near the lower band, reinforcing the downtrend. We'll enter a short position at $0.236 plus $0.01, placing the stop loss at $0.257 plus $0.01 and setting the target price at $0.143 plus $0.01. This strategy combines the trend analysis, RSI oversold conditions, and Bollinger Bands confirmation to maximize potential returns while minimizing risk. This portfolio will have the most efficient strategy to achieve high returns. Based on the historical data and forecast, TRON exhibits a downtrend. The price has been consistently approaching the support level of $0.281. The RSI values have mostly remained below 50, indicating a bearish momentum. The forecast for the next week predicts a further decline, with prices ranging from $0.287 to $0.27. Considering these factors, I recommend a short position. Entry price should be $0.287. A stop loss should be placed slightly above the recent high of $0.298, at $0.3 to limit potential losses if the price unexpectedly reverses. The target price should be set at $0.27, aligning with the forecast and providing a reasonable profit margin. To refine the strategy, we'll incorporate the Bollinger Bands. The price consistently trades near the lower band, reinforcing the downtrend. Therefore, a combined strategy will be implemented. If the price touches the lower Bollinger Band, it signals a potential entry point. If the price is at $0.272, enter a short position with a stop loss at $0.28 and a target price of $0.26. This strategy leverages both the RSI and Bollinger Bands to maximize profit potential while minimizing risk. The overall portfolio will prioritize the short position based on the combined indicators, aiming for high returns in a declining market. Based on the historical data and forecast, ARK demonstrates a clear downtrend. The RSI consistently hovers below 50, indicating prevailing bearish sentiment. The forecast for the next week projects further declines, reinforcing this trend. Given this, I recommend a short selling strategy. Enter a short position at $0.278. Place a stop loss order at $0.283 to limit potential losses if the price unexpectedly reverses. A reasonable target price for this short position would be $0.232, aligning with the forecast low. To refine this strategy, we'll incorporate the Bollinger Bands. The price has consistently traded near the lower band, suggesting it might test the middle band. I will use a combination of the RSI and Bollinger Band signals. If the RSI reaches 20, consider covering the short position. If the price touches the lower Bollinger Band, tighten the stop loss to $0.272. If the price reaches $0.232, consider taking profits. This layered approach aims to maximize returns while mitigating risk in this bearish market. Based on the historical data and forecast, Sonic exhibits a clear downtrend. The RSI consistently remains below 30, indicating oversold conditions, and the forecast projects further price declines. The support price is consistently at $0.122, and the Bollinger Bands are widening, suggesting increased volatility and potential for further downward movement. Therefore, I recommend a short selling strategy. We will enter a short position at $0.126, placing a stop-loss order at $0.137 to limit potential losses if the price unexpectedly rises. The initial target price will be $0.104, aiming to capitalize on the anticipated downward trend. To refine the strategy, we will incorporate the Bollinger Bands. If the price touches the lower band of $0.104, we will consider taking partial profits and moving the stop-loss to break even. This will secure some gains while allowing the position to continue benefiting from further declines. If the price reaches $0.101, we will close the entire position, securing a substantial profit. This combined strategy, leveraging RSI and Bollinger Bands, aims to maximize returns while mitigating risk in this declining market. Based on the historical data and forecast, Zcash exhibits a strong upward trend. The price has consistently climbed, breaking through resistance levels and showing no significant support levels. The RSI has been consistently above 60, reaching 80 on November 4, 2025, indicating overbought conditions. However, the forecast for the next week projects continued upward momentum, with prices expected to reach $498. Considering these factors, I recommend a long position strategy. We will enter a long position at $427, placing a stop-loss order at $416 to limit potential losses. The initial target price will be $457, based on the forecast price for November 7, 2025. If the price reaches $457, we will move the stop-loss to the entry price of $427 to secure profits and further participate in the potential upside. The second target price will be $468, and the final target price will be $483. This strategy combines trend following with technical indicators to maximize returns while managing risk effectively. Based on the historical data and forecast, Dash shows a strong upward trend. The price has consistently broken through resistance levels, and the forecast indicates continued growth. The RSI has been fluctuating but generally trending upwards, with values exceeding 80 on multiple days, suggesting overbought conditions that have been followed by corrections. The Bollinger Bands have widened, indicating increased volatility, but the price consistently moves towards the upper band, confirming the bullish momentum. Therefore, I recommend a long position strategy. We will enter a long position at $142, placing a stop-loss order at $131 to limit potential losses. The initial target price will be $148, aiming to capitalize on the immediate upward momentum. To refine this strategy, we will incorporate RSI and Bollinger Band signals. If the RSI falls below 20, indicating an oversold condition, we will enter a long position at the prevailing price, with a stop-loss at the lower Bollinger Band and a target price at the upper Bollinger Band. Conversely, if the RSI exceeds 80, indicating an overbought condition, we will consider exiting the existing long position or waiting for a pullback before re-entering. This dynamic approach, combined with the overall bullish trend, should yield high returns while managing risk effectively. Based on the historical data and forecast, ZKsync shows a clear upward trend, especially with the recent surge in price and the positive forecast for the next week. The RSI has been fluctuating, dipping into oversold territory, below 30, and then rebounding, indicating potential buying opportunities. The Bollinger Bands show that the price has been trending outside the bands, suggesting high volatility and a strong directional movement. Considering these factors, I recommend a long position strategy. We will enter a long position at $0.0493, coinciding with the first day of the forecast period. The stop loss will be set at $0.0450, just below the lower Bollinger Band for a safety margin. The initial target price will be $0.0648, aligning with the forecast high for the week. To optimize returns, we will implement a dynamic strategy. If the price reaches the initial target of $0.0648, we will move our stop loss to the entry price of $0.0493 to secure profits and protect against potential reversals. If the price continues to rise, we will adjust the target price to $0.0679, the final forecast price. This approach combines the momentum of the upward trend with risk management techniques to maximize potential gains while minimizing losses. The overall portfolio will be 70% long position, 20% cash, and 10% in stable coins for hedging purposes. Based on the historical data and forecast, DECRED shows a strong upward trend, especially with the recent surge to $35 and the forecast predicting further increases to $38.9. The RSI consistently moved above 50, indicating bullish momentum, and briefly entered the overbought territory above 80, suggesting a potential pullback could offer a favorable entry point. Considering the Bollinger Bands, the price has recently moved above the upper band, confirming the strong upward momentum. Therefore, I recommend a long position strategy. We should enter a long position at $25.8, placing a stop-loss order at $23.2, just below the recent upper Bollinger Band. The initial target price should be $29.4, aligning with the forecast for November 5th and the previous resistance level. To maximize potential returns, we will implement a dynamic target price strategy. If the price reaches $29.4, we will move the stop loss to the entry price of $25.8, securing some profit while allowing the position to run further. As the price continues to rise, we will adjust the stop loss order to maintain a favorable risk-reward ratio. The ultimate target price will be $38.9, based on the forecast for November 11th. This strategy combines RSI, Bollinger Bands, and forecast data to capitalize on the current bullish trend while mitigating risk with strategic stop-loss placements and dynamic target adjustments. Based on the historical data and forecast, Internet Computer shows a strong upward trend, especially with a significant jump to $5.21 on November 4, 2025. The RSI consistently moves above 30, indicating a potential for further gains. The forecast for the next week predicts continued growth, reaching $5.3. Therefore, I recommend a long position strategy. We will enter a long position at $3.98, placing a stop-loss order at $3.7 to limit potential losses. The initial target price will be $4.53, based on the forecast and the upper Bollinger Band. If the price reaches $4.53, we will move the stop-loss to $4.3 to secure profits and further increase the target price to $4.99. Considering the RSI and Bollinger Bands, we will implement a dynamic strategy. If the RSI falls below 30, indicating an oversold condition, we will hold the position and wait for a rebound. If the price touches the lower Bollinger Band, we will consider adding to our position at $4.18, setting a stop-loss at $3.9. The final target price will be $5.3, aligning with the forecast and the resistance level. This combined strategy leverages the upward trend, RSI signals, and Bollinger Band movements to maximize returns while minimizing risk.